I'm Motley Fool Canada Senior Analyst Nick Seipel, and this is the 5 Minute Major, here to make you a smarter investor in about 5 minutes. Today, we're discussing Capital Power as a potential winner from the AI energy demand boom in Canada and around the world. My guest today is Motley Fool Canada Chief Investment Officer Ian Butler. Ian, thanks for joining me.
Great to be here, Nick, as always. Been a couple weeks again, but let's roll.
So, Ian, how will this AI driven surge in data center electricity demand translate into new growth opportunities for power producers in general, but for Capital Power in particular?
For sure. And maybe just to ensure everybody's on the same page, we'll do a bit of a background on Capital Power. So Capital Power is based in Edmonton, Alberta. Capital Power has grown to become a North American power producer over the years. It owns and operates a diversified portfolio of electricity generation facilities. And its assets consist largely of natural gas powered generation stations, but there's also a renewable component to the business as well, wind and solar power plants. And their portfolio is spread pretty evenly actually across Canada and the United States. So what we're dealing with then is a utility company. And as investors, when we think about utility companies, or at least when I think of utility companies, traditionally anyways, it's sort of a low growth, boring, dividend paying entity. And Capital Power, though it ticks one of those boxes, it is indeed a dividend paying entity, currently yields just over 4% and has done a great job of growing that dividend over the years. But it's also demonstrated significant growth over the past decade as well. Revenues over that time span have about doubled from about 1.2 billion to 3.7 billion. That's expected to continue as they're just in the process of completing a material acquisition. So this is not a slow growth, stodgy old utility as sort of I have at least conceived in my head. So the fun part here, though, is that though Capital Power has been on an acquisition fueled spurt, um, this AI, artificial intelligence boom, AI is turning the power market in North America and, as you say, the globe really. Uh, U.S. data indicates load is forecast to grow by 17% a year through the end of this decade, roughly doubling by 2030. And it's set to hit about 1% of global electricity use. And we're still in the very early innings here of this AI boom. So and from where I sit, I think Capital Power is perfectly situated to really take advantage of this. They own about 10 gigawatts worth of capacity. Again, that's going higher when they complete this recent acquisition. 85% of that is natural gas fired, so very reliable. And again, split 50-50 between Canada and the US. Even more so, they've got about 1.6 gigawatts coming off contract, going to be available starting in 2027, another 4.7 gigawatts after 2028. So that's attractive to potential customers. And their plants sit near fiber, water, transmission, and there's actually attractive land opportunities amongst their current portfolio where they can expand their physical footprint. So really checks a lot of boxes for when the management team is going around to sell itself to potential data center customers, and I think they're garnering a lot of interest on that front.
Yeah, so you talk about the dividend for Capital Power over a 4% dividend yield, this being a growing opportunity with growing opportunities. So what does that growth potential mean for the sustainability and more importantly, the future increase optionality for Capital Power's dividend for its investors?
For sure. And again, over the past decade, dividend has been a very important component of the total return from this company. Again, dividend growth being a primary contributor, but that's going to continue. The company already looks like a dividend aristocrat. Management speaks as that's going to continue. There was a 6% dividend increase in 2024. It's averaged about 7% over the past year. Management's targeting another 6% growth in 2025, and then following that by 2 to 4% after that. Potentially going to use some capital to reinvest in itself, so that's actually a good thing. And the payout ratio is set to stay about 50% plus or minus 5%. So very affordable. Every indication is that this should not be a issue. The 2024 AFFO came in at about 817 million. Dividend payout was only 317 million. So loads of coverage and tack on some corporate actions, further corporate actions. And again, just AI fueled growth. And we're looking at baseline dividend and then plus call it 10% company growth on top of that. So something in the range of, let's say 12 to 15% annualized is pretty reasonable to expect at a Capital Power over the next 5 years.
Yeah, it's pretty attractive from a company benefiting from this boom in AI that's going to give you a pretty healthy dividend as well. Ian, thanks so much for joining me for this edition of the 5 Minute Major. Hope to see you again next time.